you struggle with trading, try my liquidity strategy. It is by far, hands down, the absolute best setup in all of trading. Now that might sound like a complete lie, but if you don't believe me, go look at all these traders on screen now who have already become profitable with this strategy. This is the real deal, so let me not waste any more time. Let me give you the strategy step by step so you can finally start becoming profitable. Okay, so the reason why this strategy works is because it's based off logic, right? You hear people say these markets move based off emotions or psychology. That's a complete load of BS. The only reason these markets move is for logic, and the real logic behind these markets is a concept called liquidity, and liquidity is as close to the holy grail as you can get into trading. And liquidity is simply stop loss orders, because those who move the markets, Goldman Sachs, JP Morgan, smart money, central banks, they only care about getting into and out of their positions, and they can only do that by targeting major highs and major lows on the 4-hour, the daily, and weekly. But as traders, all we need to know is, for this strategy, right, is if we get onto the 4-hour chart and we target major highs and major lows, this will give us the correct daily bias, overall, direction of the market 9 times out of 10. Probably more than that, right? Almost all the time, right? Very rarely does this not work, because like I said, it's rooted on logic, not on opinion, not on psychology. It's rooted on logic, right? The only reason these markets are moving is for logic or liquidity. So what you're going to do, and this might sound stupid at first what I'm about to tell you, but trust me, it works, right? You saw all those people, there were literally hundreds of people, or thousands, right, who have become profitable using this. So just bear with me, right? It might sound stupid, but what you're going to do is you're going to get onto the charts, right? And let's imagine you're on the charts at this point right here in price action. What you're going to do is you're going to mark out the most obvious or the most recent high or low in price action that's still intact. Now, what I mean by that is you're not going to mark out this low here because price has already broken through it. Right, I hope that makes sense. We're not going to mark out this one. We're going to mark out the most recent 4-hour low that's still intact. So not this one, but this one right here, right? Oops, let's get rid of that. See how price leaves equal lows? So this low right here and this high right here, these are our major highs and major lows in price action. And what you're going to do is you're going to ask yourself this simple question, and it might sound stupid, but you're going to ask yourself, at this point right here in price action, are we more likely to come all the way up and take out this high here, or are we more likely to just continue downwards and take out liquidity at this low and this low here? Right, it's not a trick question, and again, it sounds stupid, but hopefully pretty obvious price wants to go for this low. Now, why does it want to go for this low? First of all, there's no respect of any order blocks or fair value gaps whatsoever, right? If there was, price would have tapped, let's say, this order block or fair value gap and shot right off. We do not have that whatsoever. But more importantly, we have so much liquidity, right? We have so many stop loss orders. And like I keep saying, the only reason these markets move is for stop loss orders, right? And the reason why is because it allows smart money to get into and out of their positions. The only reason these markets are moving, not for me and you, for them, right? These markets are highly manipulated in every way, shape, or form. And there's really 2 options you have. You either copy what smart money does and make all the money in the world, or you go against them and, this is why 95% of traders are unprofitable. They go against smart money and they just lose, right? So we're going to copy smart money. And the good thing is, bro, they're making billions every day. You can be making $1 million a month and it means nothing to them whatsoever. So we're going to copy what smart money does. And this is what they're going to do, right? They're going to target highs and lows to get into and out of their positions. So hopefully that makes sense. I feel like if you have the understanding and logic behind why you're actually using the strategy, when you go on an inevitable losing streak, you'll push right for it, because this is why the markets actually move. So this right here, targeting this liquidity, this gives us our bias, our direction, which is the most important thing in trading. If you don't have a bias or direction and you're just randomly buying because of VWAP or, market structure or an indicator, you're basically, gambling at that point, and you're going to have a tiny win rate and barely be profitable, if profitable at all, right? So we've got bias, which is the most important thing. Step 2, which is always missed by all traders, is we're going to look for a liquidity sweep, which is so important. So let's get on to 15-minute chart. Let's just remove this blue line, right? Because obviously price, it still can do this, but obviously it's very unlikely, unless it's like some sort of major, news event in the Middle East or something. Very unlikely price going to take out this high here, right? So here we are on the 15-minute chart. We know price wants to go for this low here, right? This 4-hour low that we've marked out, right? Now, the markets are not as easy as this, right? It's not as easy, as buy the dip, sell the rally, and ride price down. If it was, let's be honest, right? You get the bias right most of the time, right? The bias you can, it's pretty easy to identify what I just did in the 4-hour chart. It's pretty easy to do that, but you get the bias right, but you're still not making money. And the reason why is the markets do not move based off this, right? You cannot just sell on a fair value gap, even if you are bearish, right? You can't just sell on a random fair value gap. Like look at this, right? We have a fair value gap here. Price smashes right through it. Why does it do that? The reason it does that is because we haven't waited for something called a liquidity sweep. And you hear so many different names for this, liquidity sweep, purges, run, grabs. Everybody calls it slightly different. And they have a slightly different way of saying sweep. This is what I mean when I say liquidity sweep, right? So you know how we have the old sell the rallies, buy the dip, right? What we really want to see is we want to see price come up, just take out an old high when we are bearish, then shoot off in the opposite direction. It does not need to go below this old low. There does not need to be a market structure shift. We do not look at market structure. We do not need it. It's a distraction, right? So price could either do this and then start reversing, or it could come all the way down. Does not matter, right? We don't need to wait for a market structure shift, right? And then we wait for price to retrace, and then we enter on our fair value gap, order block, VWAP, indicate, whatever you like, whatever indicator or pattern that you like, after you have the bias and the sweep. This is what smart money does. And then they ride price down. Before every big move, there will always be a liquidity sweep. It's just the way these markets are. It's the way these markets are coded, right? So if you know, you know, right? And again, smart money, their algorithms are coded to trade like this. The reality is, if you're moving billions into crude oil, you're not just going to market buy and sell. You have to take someone's place. You're going to have to take someone's place. And the only way you're going to do that is by targeting stop loss orders, right? Like I said, markets move based off logic, not personal. It's just business, right? They don't care about me or you. If you've got your stop there, you're going to lose money. However, if you enter on this order block afterwards, you're going to make money. Smart money could not care less about me or you, which is a great thing, right? Because we can make money consistently by just copying what they're doing. So you probably want to take a screenshot of this. Maybe I'll put a nice graphic of a bearish liquidity sweep on screen now that you can just take a picture of, put it on your wall and master that, because you'll see it everywhere in price action. It's actually insane. Okay, so now that we know what a liquidity sweep is, in theory, we need to look for it in price action. Now, can you see price? And remember, most important thing is that we're bearish, targeting this 4-hour low that we talked about, right, at the beginning of the video. Now, can you see price coming down, taking out stop loss orders, dropping, a little bit of a retracement, and then going down? Right? Can you see that anywhere in price action? I always say this, but I'm literally marking out for you, right? So sweeps tend to be the hardest thing that people struggle with. So again, if you struggle with liquidity sweeps in live price action, you're not alone. And I'm working on building a custom indicator, which I'll talk about probably in a future video, which actually plots sweeps and liquidity for you, which is insane, right? I've got a team of developers working on it. But anyway, right? See this here? And again, it does not matter what high or low gets taken, right? This right here is London's high and low, and it's also Asia's high and low, and it's also previous days' highs and lows. So tick, 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 right? Tick all those boxes. It really does not matter. Any major, like this high could have done, right? If price took out this high and then dropped and then gave you a retracement, does not matter, right? I'm not going to say, oh, it has to be previous session's high. Does not matter. Any major high or low will do. So here we go, right? So this right here is just liquidity, right? It's just some stop. Some people are shorting crude oil. They have their stop loss orders here and they know price wants to go for this low. But again, they're trying to sell the rallies. And then also when price starts to retrace, people are entering on fair value gaps, order blocks. Smart money punishes them, takes their position, and then rides price down, right? Just the way these markets move. Nothing personal, just the way these markets move. Now, can you see this, right? See this? See, this is how you know it's a sweep. Now, it's not always a wick, but can you see how obvious this is that it's a fake move, right? We've got liquidity at these highs here. What does this wick do? Shoots right up, takes out anyone who had their stop loss orders around this level, because obviously not every trader puts it exactly at this high, right? Some of them, I remember when I was trading support and resistance, they would say, give it breathing room. Do you remember that? Breathing room? What the hell does that mean? They're still going to get hit, right? This wick goes up just enough to make sure anyone who had their stop loss orders around this area is going to lose out, right? Smart money can enter on their positions. It drops, it gives other smart money traders and their algorithms a retracement, which we want to enter on, and then price rides down. Now, you might hear people talk about turtle soup. This is what they mean when the wick takes out these stop loss orders. They're just shorting as price takes out stop loss orders. For me, that's very risky because you never know where to put your stop. You could be right and think, oh, okay, yeah, this is a liquidity sweep. I'm going to put my stop here and I'm going to target this low. Price still wicks you out, right? So I always wait for confirmation because turtle soup's very, very risky, and only if you've got Only if you're already profitable and you want a better risk to reward, I would use it. But even then, I think it's very, very hard, right? So liquidity sweep, remember, bias first, liquidity on the 4-hour, liquidity sweep, which is on your entry time frame. I'm on the 15-minute chart. It can be on whatever time frame you use, as long as it's your entry time frame, right? So you always look for this on your entry time frame. So if you trade the 1 minute, you look for this on the 1 minute. You do not look for this on the 4-hour chart, unless, of course, you want to be a swing trader, which is absolutely fine, right? But if you're, if you're looking for this on the 4-hour chart and then you're going down to the 5-minute or 15-minute, that's not what we do. So here's the sweep, here's the liquidity. We have our bias, we have our sweep. All we need now is a simple entry. Now I'm just gonna get onto the 5-minute chart here, just so it's easier to actually see this bit of price action here. Okay, so here we are. Let's just move this over here. So this is the sweep. This wick here is the sweep. Price instantly reverses in the opposite direction. Now this is a fairly difficult example, just because the stop's very big. I always say, if you're new to, if you're struggling with liquidity and especially sweeps, just wait for a fair value gap to form in the opposite direction, because that right there will essentially tell you that this is a sweep. However, the stop is very big here, like it's a really big stop. What I would do personally is I would enter on this order block here. I'm gonna give you a second entry, which I don't normally talk about. I would enter on this order block here. And the way sweeps are is you always put your stop at the high of the sweep, because that is the highest probability setup, right? Do you know how in the beginning of the video I was saying this is a high probability setup? If you want the highest, absolute highest probability, you put your stop at this high. Now, if you want to give up, if you want to have a tighter stop, that's fine. You probably get more entries. However, you will have more losses, right? So again, trading is just trading is literally a trade-off, right? So here we go. And then what you would do is, let's say you wanted to enter here, is you would target the old low note. You target this liquidity for a 2-to-1, right? Now you also do get a 3-to-1 later on, but more often than not, you're actually not going to get that. Your second entry, right? And this is a riskier entry, right? So remember, this is a risky entry. It's still fairly high probability because obviously we've got all the price action. But instead, what you can do is, you see how price, let me get this up, right? Get the path tool up. See how price hits this order block, then reverses, then gives you a retracement, and then drops off. This can be your second entry here, right? Now remember, this is nowhere near as high probability as having your stop at the sweep high, right? This is the safe stop loss. However, if you, let's say for whatever reason, you missed your entry and price started to drop off, you see this fair value gap right here? Like this. Right, and also notice how there's no respect of any order block or stuff, whereas in this bit of price action, price touches this order block and then shoots off, right? We don't want to see any respect of it. In fact, price is wicking below this order block here. But again, it doesn't really matter. You can enter on this fair value gap, and then you can put your stop at this high here. Now remember, like I said, this is a lower probability setup, right? The highest probability is always having your stop at this high here, right? Really important that you understand that. So there is a chance price can take out your stop loss below, but in this case, look at this, right? How much of a risk reward do you get? I mean, obviously you always target a 3-to-1, which is what I would do. However, if you're going to take a risky setup, you may as well target a large risk to reward ratio. So if you just target the liquidity, you can get a 5-to-1. So it's really up to you what you want to do. I mean, if we just play price action, you can see it smashes through. But again, not every time are you going to get that, right? Not every time are you going to get that where you put your stop here and it gives you a huge entry, right? So those are two separate entries that you can do. You can have the sweep, always put your stop there. That is the best setup in all of trading, right? That is what I do personally. However, if you miss it, this is like your second confirmation, right? Second confirmation, your second entry, second try. It's there for you, right? If you want it, if you see it in price action, if you miss your entry for whatever reason and you see this, maybe you want to do it, right? But just be careful. This is a lower probability setup. Now, there's only so much I can talk about in like a 15-minute YouTube video. So if you want to learn more about the bias, sweep, entry, and the actual mindset to go with it, and everything you need to become a consistently profitable trader, go check out the pinned comment down below, and I'll give you a 1-hour completely free private training. And if you want to stay on YouTube, check out this 2-hour trading course where I teach you literally everything you need to become a consistently profitable trader.